All right, here with his September market outlook is JJ Kinahan, Chief Market Strategist at TD Amertirade, joining us now from the TD Amertirade studios in Chicago. Hey, JJ, great to see you.
Hey, Scott, always a pleasure to talk to you. How are you today?
I'm doing great. I mean, look, the market is on fire here, especially after some of the declines we saw last week. We're nearing 2,900 in the S&P 500. What would a breach of that level mean for stocks for the rest of the month?
Well, I think it would certainly give us a lot of momentum to go press that 3,000 level, if you will. Not necessarily even from a technical point of view, as much as perhaps a psychological point of view. I think one of the interesting things that's happening today also is that after 4 consecutive down days, Apple has a little bit of momentum today. In fact, the FANG stocks in general seem to have a little bit of momentum today. And I think that's also helping some of the confidence in the market overall.
And JJ, we always talk to you about your investor movement index. This is a proprietary behavior-based index by TD Ameritrade. It's now at its highest level since February. What does that mean for how investors are feeling right now?
Sure, Scott. And so I think it's been really interesting to watch so far this year. Last year, our clients took more exposure to the market every single month, and it worked out well. But come January 1st, they started decelerating their exposure to the market, which worked out for February. Now we're back to the highest levels we've seen since February after they decelerated the first 5 months of the year and started to slowly target their way back. So what it tells me is people, as we hit these highs in the market, are becoming a little bit more and more believers. But one of the really interesting caveats in that report, Scott, is the fact that people took more exposure to fixed income, which we find very interesting considering we have a rate hike that everybody's pretty sure is going to happen this month. You know, probabilities put it at about a 98%, so most figure it is already built into the market. But it kind of shows a little bit of nervousness perhaps around the December rate hike, or more importantly, can the 10-year get over 3%? So that's probably one of the most interesting things that's sort of under the surface of our report.
And you guys also give data in terms of what stocks your clients are buying and selling. And it's interesting to watch over the past couple months how your clients have been playing Facebook, right? They were trimming the stock heading into that horrible July quarter. That was when the stock was at a record high in July, and then a few hours later, all the gains of 2018 for Facebook were wiped out on the heels of that disappointing guidance. The stock is now below where it was after that quarter, and you guys or your clients are now buying it. Explain the thesis behind Facebook for some of your clients.
Certainly, and thanks for pointing that out. It's why I love coming on with you every month on the street, because you've been doing this such a long time. It's nice that you follow our clients also in terms of what's going on there. And so you're 100% correct. People started to take profits through the early summer, so to speak. Now that Facebook has been beaten up, a lot of bad news out there. You have to remember, Facebook is one of the most popular names with retail clients. People use the product often, so because of that, they tend to follow the stock pretty closely. So now they're starting to take more exposure, buy more of Facebook as we head into the fall and winter. You know, it's had its well-documented problems, but I think longer term, because of the treasure trove of information Facebook sits on, people are still a long-term believer in it. They just wanted to get out of some of their exposure. And you have to remember, many people have owned Facebook for quite a long period of time. So taking some profits off the table, and then if things sell off, buying it back is something that makes sense. It's always nice to see our retail traders trading more like professionals, and that's what professionals really do tend to do, Scott.
Well, it's a case study in market commentary, right? This is why people watch shows like this, because that's where you're getting the action that you need to make money. Other names on the buy list, JJ, were Amazon, no surprise there. Advanced Micro Devices, people may not realize that's the best performing stock in the S&P 500 so far this year. The stock has, what, tripled, and people are still buying it?
Yeah, and you know, great earnings, great momentum. They have really a lot going for them in the chip space. The fact that Intel didn't deliver on the product that they were supposed to gave AMD a lot of momentum off of that. For your viewers who haven't looked at that chart, if you want to go look at perhaps one of the prettiest charts you'll ever see of your bullish, I would say go look at that chart year to date. You'll be like, wow, it's shot out of a cannon. And then two of the other stocks I want to mention, Scott, even though they might not have been the prettiest stock so far this year, AT&T and Ford, people were buyers of those also. So you may ask why, and that goes back to my point around getting exposure to yield. Those are two stocks paying above a 6% yield right now. So I do think that search continues to go on also.
Okay, and then let's talk about some of the names that your clients took profits in. Tesla, it was quite a volatile month for Tesla in August, of course, with that privatization tweet that Elon Musk sent out, and then, of course, he reversed course and decided not to take the company private. But it's interesting, some of your millennial clients are now actually buying the stock?
Yes, and so first of all, Tesla is always one of our top 10 traded stocks, and since that privatization tweet has been one of our top 3 traded stocks every single day. People have a great interest in the product, a great interest in the company, and obviously their CEO draws a lot of press, whether you feel that's good or bad. Well, what's happened is, our clients were net sellers. Now, last week when this stock started to break 300 and head down, some of our millennial clients started to get back in. They're still a long-term believer in Tesla, or maybe a long-term believer in Mr. Musk. We have to see it. As you know, and you've reported on so many times, that yin and yang between a celebrity CEO can be a really good thing for your stock or a really bad thing for your stock. There's been a lot of reports about what's going on with Mr. Musk's behavior so far this year, so we'll have to see where that plays out. But I find it very interesting that our millennial clients really do seem to be the biggest fans of this stock overall.
And then, JJ, we had Ray Dalio on CNBC. We saw him on there this morning, of course, of the largest hedge fund, Bridgewater. He said the economic cycle is in, what, the 7th inning? I'm just curious on your take on that, and if you think it's a sort of accurate analogy to apply baseball innings to sort of the market action that we're seeing right now.
Well, I think anytime you can come up with an analogy that everybody understands, it's a good one, whether everyone believes it or not. So, I would say, all right, well, everyone seems to enjoy the 7th inning stretch and take me out to the ball game. So hopefully to where we started, perhaps we do get a chance to go to that 3,000 level or above it. With that said, the one thing that I think can continue this rally for a little while is the fact that we've never had a tax cut this late in a bullish cycle. So I really believe that will help to prolong it. And we started to see over the last few earnings reports how companies are using them for stock buybacks, which may not be something we're always crazy about longer term, but also to invest in their companies. Just a couple that come to mind might be Home Depot and Walmart in terms of how they're expanding their online business to relate it more to their traditional brick and mortar businesses. So as companies start to use this money wisely, you expect to see some longer term growth and some longer term opportunities. And I actually think that's the most interesting part over what we're going to see over the next 9 months, is those companies who haven't said what they're going to do with this tax money, how they actually use it. And I think sometimes we forget this only happened 9 months ago. So a lot of companies' plans are just coming together as we head for next year. So a lot of them should start to say in this quarter's earnings how they're going to use that money.
All right, JJ, it's great to have you back. Great information. And you can catch JJ's segments on the TD Ameritrade Network. JJ, thank you.
Thanks for having me, Scott. Great to be with you.